The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. I wanted to welcome you all to CW Research's Global Cement Volume Forecast Report webinar um, for 2019. And we're very happy to have you here. The name of this webinar is a paradigm shift in the nature of global cement drivers. And we will sort of elaborate on why we feel that these are sort of evolving and changing from the traditional market drivers during the course of this webinar. So let us begin. Okay. So today, the presenters for this webinar are myself, Prashant Singh, and my colleague Carolina Pereira, who's based out of Porto, and I am based out of Mumbai. And together, the two of us will walk you through some of the highlights of this report and some of the insight about the global cement market that we have sort of found while compiling the extended version of the volume forecast report for 2019. Please feel free to contact us on these details should you have any questions regarding this report or anything else that we sort of discuss over the course of the next half an hour or so. So what's on the agenda? The agenda is actually just twofold. One is an initial introduction to the CW group. And then, of course, we dive into the real meat of the matter, which for why you're all here, which is the highlights of the extended version of this report that we will walk you through. So, for those of us who are aware of CW, please bear with me. For those who are not, let me just give you a quick rundown. CW Group is present across 3 different verticals: the advisory, research, and media verticals. Under the advisory umbrella, CW works with global consultancies and leading institutions, including the World Bank and other sort of clients. We also provide consulting and advisory expertise on a diverse product portfolio. Under the research branch, CW focuses on cement demand globally, as well as detailed industry and country reports. We also provide historical as well as forecasts for these markets for a variety of products. And one of our leading research products is obviously the volume forecast report that we are here to discuss today. The last but not least, we also provide commodity price assessments for cement, clinker, as well as petcoke and coal for some of the more important markets regionally. In the media umbrella, we have access to our vast database that you can subscribe to. We have newsletters for the various topics, for example, cement, clinker, that you can sign up and get updated news reports every day in your inbox so that you're aware of what's happening across the industry and across the globe for that particular topic. We have also magazines. And last but not least, CW Research under its media wing facilitates industry-specific meetings. For those of who are interested, the next specific industry meeting is going to be the CW Summit in the Americas, which is going to be held in Miami in 2020. It's a great opportunity to interact with the top management at CW Research and discuss with them the understanding of what's happening in the global cement markets, the drivers, how the perspectives and fundamentals of the industry are changing on a regional, national, and global level. And the most important thing is you get actually your hands on all of the data at the end of the two-day conference that you could take with you. So I think that's an invaluable opportunity that some of you might be interested in, and we'd be happy to sort of discuss this if you contact us directly, or at the end of the presentation, you'll have contacts for the marketing person that you can ask about this. So let's actually just dive into this. So we're going to be now starting the report section, and now we're going to go to the main important slide where we talk about this report. What does this report include before we sort of dive into it? This report is published in October, and this is the extended version of this report. A quantitative update is published in March. In the extended version, our report includes a detailed analysis of cement production, consumption, net trade, and capacity. The analysis encompasses macroeconomic as well as construction sector context, and we provide a historical 5-year look back as well as a 5-year forecast. The advantage of subscribing to this report is that in the quantitative update, we update and the forecast accordingly to what has happened in the preceding 6 months, so that you are always up to date in terms of the changes in the outlook for the industry based on the global economic scenario. And for those who are interested, you can go to a more detailed understanding of this report if you click on the link below. So this is actually a snapshot of the coverage of the areas of the countries that we cover currently. As you can see, we cover most of North America, Latin America, Asia, with some coverage in Africa. We are constantly working to extend that coverage, but we sort of have to do that deliberately as we need sort of sources that are sustainable and reliable over a period of time. So we're always striving to sort of add more countries in Africa to enhance the understanding of that particular market. So for those who would want to understand how the veracity of the information that we provide in this report, this is what the methodology that we use, and it's obviously shared in much more detailed description in our report, but we basically encompass and use historical data, in-house statistical models, validated by primary and secondary research to develop a country-specific model for all of the 57 countries, and which is then compiled into a regional and then a global level of forecast. For all the other countries that are not covered independently, we put them into a sub-regional, other regional block where the information in terms of their kind of consumption and production is compiled as a unit and not on an individual basis. So the forecasts, as you can see on this point, are based on a combination of macroeconomic data and GDP, population, as well as historical tendencies, including seasonality to forecast consumption. and those are then obviously extrapolated for the regional numbers as well. So to give you a brief insight, this is the first global economic and construction slide where we look at the changing economic scenario. And if you look at this slide, this is not new to most of you, but the IMF obviously has been downgrading the economic forecast for the global economy continuously since the start of the year. As a matter of fact, it's actually going to, again, it's downgraded its forecast for 2019 and 20 in next week's annual meeting, which is happening on October 15th. And some of the insights that they mention are that the US-China trade war is going to impact global economic growth by a magnitude of at least $700 billion. To put that in perspective, that's basically the size of the GDP of the country of Switzerland. And some of the factors that we're sort of noticing is that the global economy is now moving into a synchronized slowdown. And that is obviously impacted by, the U.S.-China dispute, also Brexit, as well as increased volatility of oil prices caused by increased tensions in the Middle East. Now, among the major emerging markets, obviously, India has actually seen a substantial decrease in its projected growth rate, and that's due to a compounding of multiple reasons, and not just including the tail end impact of the imposition of the GST, the General Services Tax, in 2008 and 17. Also, some of the NPAs that have been coming out of the banking sector that have been impacting investor confidence, as well as impacting loan growth. So that and the government has actually been taking some of these factors seriously. They've implemented a series of economic measures to stimulate demand. They've cut the corporate tax rate down to like 22%, which is among the most competitive in the ASEAN region now. They've reduced the interest rates, and they've also sort of made reforms to the GST slab rates for different industries and products. So we should sort of see the impact of these policies bearing out in the 6 to 9 months, but over the immediate time period, we should see reduced economic growth for sure. And similarly in China, China's economy has obviously also been negatively impacted, but China is also making a concentrated effort to boost demand by investing heavily in construction. And that is obviously also going to show the net result in the next 6 to 9 months as those hundreds of billions of dollars of construction funds flow through the system. In the advanced economies, we saw surprise growth in the first half of the US economy in 2019, but that already tapering off as the impacts of the US-China trade dispute come into play, plus increased political uncertainty in the US caused by numerous political developments that are better left undiscussed in this webinar. And the fact that an election year is happening in a year's time, the possibility of seeing a large amount of investment in the infrastructure field are probably slim to none. So the growth impact, economic growth impact should be, we should see a reduced economic growth outlook for the United States. And need I say about the EU, we have Germany and France slowing down, and the cloud of Brexit is over the continent. October 31 is not too far away, and there's still no clarity as to how or what will happen post that date. And that economic impact is still not been sort of truly factored in, because I don't think everybody expects the doomsday scenario, but that impact will obviously have a huge impact on the construction sector in not only the UK, but also Europe. So to the slide that basically sort of defines the reason why we said that there was a paradigm shift in market drivers. As you can see, what we're seeing now, which we have not previously seen, is that countries are making a shift to actually developing entirely new urban ecosystems, not just infrastructure projects. Some of these projects are relatively small, and some are humongous. Key among them, some numbers to sort of give you a perspective. Some of the major important ones include the new administrative district in Cairo, in Egypt, which is basically the estimated cost is around $58 billion. And it will cover an area of around 700 square kilometers, with about 6.5 million people to live in this new district, new capital. And the parts of it are supposed to be completed by 2022, though that seems slightly optimistic. And the final product, capital, in terms of the final product is not expected to be ready for at least another decade, or if not a little more. And close to Egypt is Saudi Arabia's Neom City, which is expected to see an investment of in excess of $500 billion. It will cover a magnitude of 26,500 square kilometers, with a desired completion date of 2025. But again, that seems unlikely. But the ambition is amazing in terms of developing an entire huge ecosystem to sustain that city. Smaller one in India, in Amravati, with an expected cost of several billion. This is already under scrutiny, though, because of significant corruption charges on land allocation of the previous government that started this process. But significant parts have already been built, so there is a distinct possibility that the project will be completed, but may not be as per the grandiose plans of 7 billion. It might be shaped down to moderate size. Indonesia has just recently announced that it's going to plan to shift its capital out of Jakarta, which is sinking, to a new city in Borneo. This is estimated to cost $33 billion and cover an area of 1,800 square kilometers, roughly 3 times the size of the existing city of Jakarta. And last but not least, there is the development of the new Clark City in the Philippines to move out of Manila. This is estimated to cost US dollars 14 billion and cover an area of around 95 square kilometers, with a first phase supposedly done by 2022, but the entire actual city will be only complete by at least another 2 decades. So it's interesting to see that now countries are sort of trying to stabilize their up and down cycle of demand by creating these mega projects, which will likely sustain for decades, or years, if not decades, if they're sort of taken through to the actual end. And there's a good likelihood to assume that most of these projects will see a conclusion, maybe not to the same volume that there was sort of assigned to them initially, but this will definitely help in altering the market drivers, especially for these countries, for the foreseeable future. And now I will I will pass this baton on to take you through the main and salient points of this presentation in terms of the numbers to my colleague Carolina, who's going to sort of take it from here now. Carolina?
Thank you so much, Prashant. Welcome, everyone. I would like to invite you to join me in a brief overview of the worldwide cement capacity. As we see in this first slide, capacity rationalization in China is being balanced with additions in the Asia excluding China region. Although China continues to decommission aged, inefficient capacity and replacing it partially with top-of-the-line modern and large cement plants. The rest of the world, and when looking at the rest of the world, we note that other regions are picking up the slack, with Asia ex-China and Africa in particular leading the charge with substantial capacity growth planned for our forecasted period. Now, if we analyze the Latin American market, we see that it's still slowly picking up, having encountered the double challenge first as a result of the Brazilian recession in 2015, and then the continuing challenges in Argentina post 2018. For the North America and Western Europe markets, we know that those are more mature, and we expect to witness minimal changes. For the Eastern Europe region, Turkey has witnessed a massive decline in demand, and for the foreseeable future, capacity growth seems a slim prospect. Then we would have to take a look, for example, for Russia, where growth is slow due to sustained impact of the US sanctions and the lower prices, which of course are a result of the global economic slowdown. If we have a look at the Middle East, we see that challenges in Iran due to US sanctions are also expected to negatively impact capacity growth. Saudi Arabia, the UAE are focusing on Neom City and Dubai Expo 2020 as major infrastructure projects that will, of course, help to grow. Now that we have presented a global overview, we will move to country-level analysis of capacity. Smaller regional players are now driving capacity growth. We see that, for example, Bangladesh is adding the largest volume of capacity, excluding China, of course. And when looking at this chart, you can also see that the Philippines is the leader in terms of percent of capacity growth. India, of course, we expect capacity additions to be at around 100 million tons until 2024. If we have a look, for example, in terms of who are the main responsibles for the capacity additions this year, we know that Asia ex-China is expected to have over 40%, which of course will be the main responsibles would be India, Bangladesh, and Indonesia. The second runner-up would be Africa, the Africa region, with around 25% of all capacity additions this year, due to the cement markets of Algeria, Nigeria, and Egypt. Now, and moving to a different topic, I would like to invite you to join me in this global consumption analysis. As you can see in the next map, and this heat map, we show a landscape of the vast majority, the fact that the vast majority of the scrutinized markets have an increase in cement demand for this year. If you can see, you see that the more reddish marked countries are the ones that present a positive year-on-year change in terms of demand, in terms of consumption, and the ones with more bluish, blue-toned colored countries are the ones with not so positive growth. Of course, in here, I have to state the fact that China continues to lead the global cement demand, with an upsurge in consumption driven by infrastructure sector. Figures for 2019 and onwards are now more optimistic compared to the ones that we did in our previous updates. Again, let's have a look at the regional analysis. So, only 2 of the 7 regions under revision are set to witness a decline in cement demand for this year. Turkey is the second largest cement market in Central and Eastern Europe, has offset the positive figures of Russia, as we have stated in this presentation, and for other regions in the market, as it lost around a quarter of its demand between 2018 and 2019. If we have a look at the Middle East, we know that the Saudi Arabia market postponed recovery it will impact the 2019 cement demand numbers within this region. After several years experiencing a contraction on cement consumption, the Saudi market is now expected to return to growth by 2020. For advanced economies, we believe that they will be witnessing a moderate and steady growth, while emerging markets are expected to achieve a much higher growth rate, accelerating in our forecasted period. Now, on a country level basis, we highlight the fact that Bangladesh and Turkey are cases on the opposite spectrum of the demand curve. In Southeast Asia, Bangladesh and the Philippines share a rapid urbanization and a will to close the infrastructure gap through intense government investment, of course, especially in the Philippines case. We should have a closer look as well at Iraq. Is one that this country is also, this market is also increasing its cement consumption thanks to the efforts and to the rehabilitation, and now that the security environment is more stable. We will stress the fragile state of Turkish cement market that has derailed by the currency crisis and the US tariffs on Turkish products, with prospects remaining, in our opinion, very cloudy for the foreseeable future. Now, I would like to end this presentation with some of our closing remarks. First of all, economic growth is no longer a guarantee. Macroeconomic scenario becomes grimmer. Emerging markets are carrying out large infrastructure projects that are the backbone of the cement demand growth. shifting the paradigm of the drivers of global cement demands. As such, most of the capacity additions are coming from the smaller markets, especially in Asia excluding China. Finally, global cement demand is supposed to increase in the current year, recovering from a slight fall in the previous year. However, prospects for 2020 indicate a consolidation in terms of demand. With this, I'd like to thank, first of all, my colleague Prashant for joining me in this presentation. Thanks everyone who paid attention and liked joining us. Please feel free to reach out to any of us. We will be glad to answer any of your questions. Have a great day. Bye.